For all the latest news in North Central Washington, go to ncwlife.com or find us on Facebook. Got a news tip? Email us at news@ncwlife.com or call 888-2020.
Hello and welcome to Let's Learn here on the NCW Life channel. I'm Eric Granstrom. We cover all kinds of topics on this show. And today we're starting our series, well, it's getting to be that time of year, talking about taxes and tax tips. And we've got Pete Lucchini here from Cordell Nair & Company. Pete joined us last year and she's back again this year. So Pete, welcome back.
Thank you. Thanks for having me.
Happy New Year, I guess we could say.
Yeah, thanks.
So let's see, I think the week of Valentine's is here, so I don't know how much love we're going to get from the IRS this year, but I wanted to ask you this first, because I kind of just cursorily pay attention to what's going on. Mm-hmm. It seems the IRS is a nicer entity now than it was 10, 15 years ago. Is that right?
Well, it is a little bit nicer than it used to be. It's a little harder to get a hold of them now than it used to be as well. So, but no, it tends to be, they did a little bit of work back in, I think, the late 90s and the early 2000s to make sure that the revenue officer's goals are to follow the rules with courtesy and kindness. Okay. So.
Well, you get more flies with honey. Is that the thing? Is that because they want to collect on what's owed? Yeah. And I guess maybe not so much of a heavy-handed approach might be a little more.
I think so. You know, they got enough pushback from the general public that kind of went that direction. But I mean, honestly, the IRS is graded on their ability to follow the rules, not on their ability to collect. Right. So they tend not to, in the field, workers tend not to be as focused on collecting the dollars as they do on making sure they get it right.
Now, Pete's a certified public accountant with Cordell Nair & Company, but you just added a new title. What is that?
I've got an ABV designations, accredited in business valuations.
Okay, which means what to us?
Probably not much to you.
Okay.
Yeah.
But if we're in need of a business professional, especially when it comes to the IRS, especially we talked about this last year, you end up doing a lot of court work, or at least testifying on behalf of people, businesses, that type of thing. And when it comes to the IRS, it's nice to have that title behind your name.
It certainly doesn't hurt.
Well, let's talk IRS. Okay, so I hate to have this one be our first lead off, at bat here, but trouble. Yeah. If we get in trouble. Yeah. How do we get in trouble? What gets us in trouble?
There's a few ways to get in trouble with the IRS. The easiest way is just don't pay your taxes. Mm-hmm. The kind of the deeper bad way to get in trouble is to not remit 941 taxes. So if you're an employer, a small employer, a large employer, and things get lean and you don't have enough money in your checking account to pay all your bills as they come due, the easiest thing that you can do is to just not submit your payroll taxes, which is that Medicare and Social Security and withholding that you have withheld from your employees' checks. Mm-hmm. And so we like to say, kind of in the industry, it's the easiest loan to get because you don't have to apply for it. You simply just don't send it in. But it's kind of the hardest loan to pay back because they will figure it out, they will find it, they will assess egregious penalties that can put you at risk for closing your business down.
I've never been an employer myself. So walk me through that process for those that might, we have entrepreneurs all throughout the Wenatchee Valley. They're starting new businesses and hopefully that business is growing and they add employees. Right. So that hurdle that they have to go through as far as, okay, here's now the world has changed for you now that you have employees under your guys. Yeah, there's actually a lot to having employees, and it's really complicated. So I always tell people, consult with your accountant because they usually can at least mitigate some of your stress over it. Having employees is very challenging, particularly in Washington State. We have a number of rules we have to follow, a number of forms we have to report, a number of taxes we have to remit, all with certain deadlines and requirements. So it's challenging in many ways, and we see some of the very small businesses that try to keep their business small enough so as not to have employees because it is so challenging. So
Yeah,
That's where you get the whole, here, I'll give you $50 cash if you help me with this this little project.
That does tend to occur.
Yeah. Why is it under the table, the term? Where did that come from, I guess?
I don't know.
I
don't know.
Popped into my head.
Yeah, that's a great question.
So is it quarterly? Payroll taxes, are they quarterly? Are they monthly? How often are we supposed to be doing this?
It generally is quarterly. It depends on what kind of entity you are. Some farmers can remit it on an annual return. Some very small employers can also remit it on an annual return. They're usually called 941s because that's the name of the form that you remit on a quarterly basis. If you do an annual, it's a 943 or a 944. And then, you know, the L&I tends to be quarterly, as does unemployment. Department of Revenue filing requirements with the state of Washington will either be monthly or quarterly or annually.
If they're holding that back for whatever reason, and they get the letter from the IRS, I assume that's how it happens. You'll get a letter, you'll get a contact one way or another, correct?
Well, it depends. If you didn't file your returns, you'll at some point likely, because they're used to getting the returns, get a notice saying, hey, you didn't file. You either have to file a no activity return that you didn't have any payroll, or you'll end up filing. The problem is you can actually get in trouble for not paying the taxes, and you can get in trouble for not filing the return. So even if you're not going to pay the taxes, we still recommend that you file the return because there's a late file penalty.
Right.
So they're going to know. And that's when they start generating correspondences to you, which is, hey, you didn't remit your payroll taxes. And immediately it's going to tack on a late deposit penalty based on your deposit schedule. And your deposit schedule is set by them based on how large your payroll is.
Right.
So you can be what's called a monthly scheduled depositor or a biweekly scheduled depositor. And so if you don't do that, then they're going to start contacting you, usually by letter, to either try to collect the payment. When that doesn't work, then they'll escalate it. They'll continue to send you more letters. And so we always recommend respond to those letters, contact your accountant to try and get some sort of representation, because we're very good at working with the IRS. You know, IRS gives most people, any kind of correspondence gives them anxiety. And so if it doesn't give me anxiety anymore, unless my name is on it. It tends not to give me anxiety. So we can usually work something out. And then we'll start the process of figuring how to get it paid. Perhaps we can get some of the penalties alleviated. We can maybe get them on an installment agreement. We kind of diagnose what the problem is and then take a plan of action going forward.
So you're the tax doctor,
A little
basically.
bit, yeah.
Okay. Well, because that not only impacts the employer, but it impacts the employees, because they see their pay stub as, okay, all of that's being withheld. It's going to where it needs to go. So when I file my taxes as an employee at the end of the year, then also I have that deduction or
withholding. Well,
withholding,
so
right.
there's some irony there. The reality is it actually doesn't affect the employee. It doesn't affect the employee at all, because the government is the entity that you are filing your taxes with, and so long as your W-2 is filed that shows your withholding, whether or not it's been paid is irrelevant from the government's perspective. You'll still get your refund if you had paid in, or if you were due a refund. So in many ways it's good, but it is an indicator of insolvency for an entity. So when you're not paying your payroll taxes, there's some real risks. And so what I tend to recommend to clients is you're better off not paying your rent or your utilities than not paying your quarterly 941 taxes. As I tell people this all the time, you're better off borrowing from Uncle Guido than Uncle Sam. So for a number of reasons.
Okay, well, we'll talk about maybe how to avoid this.
Okay.
And if you do find yourself on lean times, you know, some of the things that you might choose to do. I don't know about rent or not, but we'll come back here on Let's Learn on the NCW Life channel with Pete Lucchini with Cordell Nair and Company as we continue with our tax tips here for 2018 right after this.
Are you wanting high-speed internet but don't have access to PUD fiber? Try Sky-Fi high-speed wireless internet from LocalTel. Call 888-8888 today.
Welcome back to Let's Learn here on the NCW Life channel. I'm Eric Granstrom, and it's tax tip time. Yeah, I know. We try to avoid it, but you shouldn't. And that's why Pete Lucchini is here from Cordell Nair and Company to talk about, okay, if we got a little trouble with the IRS here. So we're kind of focusing in on employers, those who are business owners, that in reference to the payroll tax. So what if times are tough and I got to look at cutting? Now, before we went to the break, you talked about, okay, don't pay your rent or something along those lines. I mean, Really?
Really.
Before we withhold from Uncle Sam?
Right, 941s is the number one thing you should pay first.
Okay.
Well, employees first,
Right.
and then 941s, and then everything else you can put in a different hierarchy. But yeah, absolutely, because there's just no forgiveness in that regard, and it's so challenging to work with them. To work it out. We can get you on an installment agreement, which is great. You know, my recommendation is to keep in contact with the IRS. Don't bury your head in the sand. Face the problem head on. We can always work it out. Generally speaking, no one's going to go to jail. It's rare that they would convert any kind of, it would have to be exceptionally egregious for them to convert it to a criminal penalty.
I think the tendency might be, especially the smaller the business, is that, hey, I'm small potatoes. There's, you know, millions and millions of other people out there that are taking care of this. The IRS is not watching. Is that true? And how does the IRS figure it out? I mean, do they actually have, I mean, they're going over it. Is it computers? Is
It's
it
all
actual
computers,
people?
and you know, basically the computers do a lot of the work, and then they'll assign it to a revenue officer or a collection officer.
If there's a red flag that comes up.
Yeah, I mean, anytime that there's unremitted payroll taxes, then a collection officer will tend to get involved. And so the problem with payroll taxes is there's what's called the trust fund recovery penalty. And so if you don't remit it, even if your business goes out of business and there's no money, then the IRS will acknowledge that the business cannot pay it anymore, and they will write off the debt to a certain extent. But what happens is they'll take that debt and they'll assess it to anybody who's considered to be a responsible party. So any owner, any check signer, anybody in authority, anybody who had the ability to separate those funds and remit them to the government could potentially be on the hook.
Wow.
And what they do then is they assess it to you personally, and so they'll seize any refunds that you ever get in the future. They will attempt to collect it from you in a number of different ways.
How, in reference to that, you have, you know, I hire a bookkeeper, and that bookkeeper is keeping track of my stuff and telling me, okay, you need to write this check.
Right.
Eric, write this check. Eric,
Right.
write this check.
Right.
But then you get this letter from the IRS saying, hey, it didn't happen. Is that bookkeeper liable, possibly?
If she has check signing authority, she's more at risk for being considered liable. It's a facts and circumstances test, and so a revenue officer will actually come out and assess it, or a collections officer, and they will come out and assess the situation and ask you to sign some documents. I never recommend meeting with a revenue or collection officer without some sort of representation, just because we know how it works, we know what they're asking. It can be very scary and intimidating, and so we've had some really good outcomes. We'll get the business on what's called a CNC status, or currently not collectible. There's ways to mitigate some of the tax consequences. They have only 10 years to collect it. If we remit just the trust fund portion, which is the withholding and the Social Security and Medicare from the employee side, not the employer's side. I know it's very complex, but that's the details of it. If we do just that and we remit just the trust fund portion, it'll apply directly to the principal, which is beneficial. There's a lot of strategies that are just very intricate.
Well, and it's like anything. You keep putting something off, and it just gets bigger and bigger and bigger. Coming to you and saying, okay, look, I got this.
Yeah.
The best approach is, okay, let's get a hold of them right now.
Yep.
And try to catch up what you can right now, right?
Well, you know, the answer is it depends. A lot of times,
we're back to that.
I know, I'm sorry. A lot of times we'll look at their financial situation. We'll see, you know, are they close to retirement? What is their income looking like? Are they eligible for what's called an offer in compromise? So now we're looking at individual taxes. You can get in as much trouble not paying your individual taxes as you can for 941s. It's just 941s tend to be much larger numbers. But we will assess it. We'll look at and assess whether an installment agreement is what's best for them, because they still need to live their lives, provide for their families, and those types of things. So we'll look at what works best for them, and we'll do it within the set of rules that the IRS has provided us. So there are several different strategies, and we always try to do what's best for the client.
When does it get to a point where they actually have a hearing where you actually go, you know, they hire you, for example, and you represent them in some sort of a presentation?
Well, I've never been to tax court. I tend to...
That's because you're good, right?
You never know. Well, number one, it's very expensive.
Yeah.
So if you have to owe a very large dollar amount to want to go to tax court, because it's expensive to go. That said, we tend to know the answer. So there's usually not a lot of gray area whether they really owed the tax, whether they didn't really owe the tax. So what happens is if we don't get the answer we want, and we don't think that it's a fair answer, I'll send it to appeals. And so I'll push it to appeals. Appeals has a little more ability. It's a different department within the IRS. It has a little more ability to make judgment. And so I have had very good outcomes with appeals. I don't think we've escalated anything ever beyond appeals, and we've gotten either at least all concession or some concession at the appeals level.
Great.
Yeah.
So it's not as bad as you think.
It's really not, but you know, there's not a lot of people that tend to want to talk to the IRS, so I'm one of the few, I think, that does it.
We're going to take a break. I want to talk about the difference, if there is a difference, when we get into the situation, because I had a situation just with a bill. We've gone electronic with so many things, and I know that probably our communications with the IRS have also gone electronic in all forms. I wanted to ask you a little bit more about that coming up. So we'll take a break and come back with more of Let's Learn and our tax tips on the way next here on the NCW Life channel.
Is your vehicle in need of a quick oil change or tune-up before hitting the road this summer? Stop by Quick Lube and Tune, the home of the good guys at 610 South Wenatchee Avenue.
Welcome back once again to Let's Learn here on the NCW Life channel. I'm Eric Granstrom, and Pete Lucchini, a certified public accountant, is joining us from Cordell Nair & Company on our tax tips program. First time around for this. We're going to have Pete back here on future episodes as well. We're talking about getting in trouble with the IRS. And I had a situation here in December, and I get a call in January saying, hey, you didn't pay your bill. Well, everything's electronic now. I paid it online. I had the receipt. I went to my bank statement. It said it was there. But the company had no record at all of me paying that bill. So it was this whole back and forth thing. With the electronic age we're in with dealing with the IRS, specifically when we're talking about payroll taxes and such, how many checks are people actually writing anymore, or is it an electronic transfer of some sort?
0 checks.
Really?
Yeah, it's payroll taxes are remitted through the EFTPS system. I can't even tell you what that stands for, Electronic Funds Transfer Protocol System, something like that.
Okay.
And that's the way it's been done for a number of years now, and it's required that they either submit it that way or another electronic version. Another way to pay taxes now, personal taxes like quarterly estimates. If you don't have withholding and you're a business owner and you're paying quarterly estimates, now the IRS recommends doing direct pay, which is irs.gov, and then you type in direct pay, and it takes you to a screen where you verify who you are by providing your name, Social Security number, address, and then your filing status for your last tax return. And then it verifies who you are, and you can do a direct bank debit from your account. You provide the routing number and the account number. And it's nice because you get a printed output that says, verification that says that you did it, and you have that for your records. Whereas sometimes with a check, you don't know when they received it, where it went in the mail. You don't have to send it certified mail. So most times the IRS loves getting those.
I know Sean Patton takes care of the IT technical stuff at Cordell Nair, and we had a great conversation with him about some of that in regards to last year. There's so much fear about identity theft and putting your stuff out there. And I think as a business owner, as an individual, I'd be a little leery of giving the IRS my bank account number, because then if there's something along the way that, I'm going to pay this, but I'm not quite there yet, they're going to go, we're going to take it right now. Well,
I would acknowledge that that's probably a reasonable fear, and we should have a healthy amount of fear related to IT. That said, if the IRS really wants to go clean out your bank account, they're one of the most powerful entities in the world with their access to databases. So they have access to the U.S. Postal Service. I mean, they're going to get your bank account number, and they will clean it out if they really choose to. The good news is they have to do a protocol before they get to that point.
So they're going to
tell you first that they're going to do it. So there's some good news there.
So we've kind of talked about how if you get on the ball with this, you can at least not maybe freeze, but reduce some of the penalties. You can reduce or eliminate some of the future penalties if you're saying, okay, hey, I was bad. I know we got an issue here. And from that point forward, do you recommend, okay, so we're talking about something that's happened in the past for months or a year or something along those lines. From that point forward, do you recommend to those business owners, okay, continue to pay from here on out. We're going to handle this element.
So in those cases, it's actually penalties continue to accrue on that existing balance. So they don't give you any break on the penalties or interest. Interest is actually statutory; it's required by law. So there's a little wiggle room in the penalties if you could find a reasonable cause. Meeting the reasonable cause penalty abatement is challenging at best. And the only way I've had luck doing it is working one-on-one with an individual revenue officer. Over the phone never tends to work. So that said, going forward, you want to keep current on all of your current payroll taxes. So if you've got a blip in your history where you didn't comply and you didn't pay them on time, instead of borrowing from Peter to pay Paul, so to speak, and catching up with the old stuff, just stay current on your current stuff going forward, and then work out an agreement with the IRS on the old balance. Always keep current on the new stuff. When they get into an installment agreement anyway, if you aren't current on any of your taxes, they'll default automatically the installment agreement.
Going back to an employee of that said company, how do you know?
You don't know.
And you would, because you say the IRS says, hey, this was withheld, so you're good.
You're good. That you don't know.
Just would never
You'll
know.
still earn your Social Security credits. So Social Security and Medicare, it goes into a giant account. It doesn't go into an account with your name on it because it's not your money. It's to pay retirees that are retired now. Yeah. But what it does is you earn credits for that, for those working earnings, and that doesn't change. You still get those credits.
Okay.
So you don't know.
That's interesting.
Yeah,
because I had an unfortunate circumstance where it wasn't the payroll it was a payroll deduction. It wasn't the part that goes to the government. It was the part that was supposed to be for my retirement that was held for 6 months and was used to pay Paul. And I had nobody in the company had any idea that was going on, and that became a whole mess. But
well,
a little different.
That leads you to reviewing your quarterly retirement benefit statements, and that's a Department of Labor issue. And if I'm correct, I could be wrong, but there's no statute of limitations on retirement benefit contributions. And so the Department of Labor, if they catch wind of it, they'll make sure that the employer makes you whole.
Right. And he did eventually pay us back and put it in.
With
earnings. It was a real lean time, and he thought, just like you said, well, it's easy if I just kind of push this aside and do this for the time being. I'm going to have that money to pay it back. Well, you get yourself in deep trouble.
You do.
That. So could I go to jail for this? If I'm an employer and it gets to the point, at what point do you say, okay, Fred, you're going to jail? Yeah,
it's rare that they convert them criminal. I've never actually seen it. The IRS isn't that aggressive, particularly when there's lien times or errors or those types of things. You would have to have some serious intent to defraud the U.S. government before they would convert those charges criminal. Okay. So it's possible. It's highly unlikely.
And who does that? It's the IRS they don't have their own cops, do they?
They don't, but revenue officers do. I believe they do carry a badge and all sorts of things. So.
Okay. Well, the letter enough is scary.
It really is.
That's why we have you in, and that's why we have you doing the wonderful work that you do, because you can listen.
Nobody else wants to.
Yeah, no. And she actually chose this.
Right.
Yeah, that's amazing. Give us a number at Cordell and Nair if folks have any questions, if they did maybe get a letter here recently.
Sure. It's 663-1661.
Okay. And it's Pete Lucchini here with Cordell Nair and Company. And in fact, coming up next, Pete's going to join us on our second episode of our tax tips here on the NCW Live channel to talk about this is an interesting conversation. I'm looking forward to this. When does an attorney hire an accountant?
Right.
Instead of the other way around.
Right.
Okay.
Right.
All right. And I'm sure this will probably play on some of the conversation we just had, too. Okay. Pete Lucchini joining us here for Tax Tips on the NCW Live channel. If you want more information or you want to watch the shows after the fact, you can go to our website at ncwlife.com and watch them all and learn along with us here on Let's Learn on the NCW Live channel. Thanks for watching.
Stay up to date with what's happening in North Central Washington. Go to the NCW Life Community Calendar at ncwlife.com.